Hi, I'm Sloan Ortel. I'm a content manager at CFA Institute, and I'm here with Luis Viceira, who's a professor at the Harvard Business School and a senior associate dean. We're here in particular because he's also the leader of the investment management workshop, which has been around for 50 years, right? More than 50
The program has been running for 50 years, since 1968. That was the first time. I wasn't there though.
Me neither. Let's jump to a case. We were talking about Vanguard a little bit. What's innovative about that firm?
Well, believe it or not, it's a firm that's still highly innovative. The case is actually titled Vanguard at 40, so it's getting into its middle age as a firm. We wrote it in at the 40th anniversary of the firm. Obviously, everyone have heard of Vanguard, how it is an extremely successful firm, and you would say, what's interesting there, But the whole premise of the case is to think, well, you have been extremely successful. So now what? And indexing, which is what you have been promoting in the markets, is the dominant investment strategy. Everyone is going into index, or lots of people are doing that. You seem to have succeeded in every dimension. And then the question in the case is, what should Vanguard do? And it turns out that the case is about discussing the challenges that they face, and understanding that the fact that you had been successful in the past, that is not guarantee of future performance, as we all know. And the case is about understanding the challenges of big asset management organization like that. And one of the things that come is when you have been so successful in indexing and you are managing such a large asset base and investor base, is how you still keep fresh your thinking, how you still serve your clients, and how you still stay innovating in every space. Yeah, and one of the things that come out, for instance, is in the space of asset management. Vanguard has been traditionally producing index funds or low-cost funds. They have moved, actually 1/3 of their assets is actively managed, but with a premise of having low cost. But they offer you your equity fund, they offer you your fixed income fund, they offer you your global equity fund. But the question is, they don't tell you how to put everything together. That's a very small part of the business. And then one of the things that come out in the case is discussing whether they should be doing that.
Yeah.
And how do you go about that? One of the things they're doing is these personal advisory services, and you think about, well, they are how you grow that business, how you structure it, how you go into attracting new generations, for instance. Millennials, that's one thing that comes out in the case. I'm a middle-aged person, I like Vanguard, I might be inclined, but how a millennial like you, how do Vanguard actually end up attracting you? Because if you think about in a generational perspective, well, you might, if they don't attract you, I eventually am going to retire, eventually I'm going to spend my assets, and with that, Vanguard will die.
I had the privilege of actually being at a CFA conference where both Jack Bogle and Gus Sauter spoke, and someone asked Mr. Bogle about ETFs, and he did not have very many nice things to say about the concept. That's sort of one of the things that millennials like me kind of want. So what are some of the? You've had all this success. How does actually that change selling process work inside of a firm like that?
Well, there's a firm that needs to think about innovations. In the case of ETFs, there are different opinions, but the reality is of the fact is that the ETF business at Vanguard has grown enormously. And that's one of the things that show up in the case on how it has been growing, about thinking about an innovative structure for ETFs. Scale is very important in this business, and they figure out a way where you can create an ETF that ends up being another class share in a bigger fund, that mutual fund that is doing the exact same thing, and with that you instantly get all the benefits of large scale on reduction of costs. That's one of the things that come out in the case. And also in attracting younger, this millennial generation is to think about how you offer them asset allocation services, investment services that go beyond a menu of funds and more into financial advice.
Gotcha.
And one of the things that happen is the financial advisory industry is an industry that is now has been not as disruptive as the mutual fund industry, if you wish, right? Mm-hmm. And one of the things that in the case is is that the next frontier for Vanguard. Mm-hmm. They disrupted the mutual fund industry, bringing costs down all the way to the single digits in some cases in terms of costs. How about financial advice? Mm-hmm. How about is there a room to actually offer low cost financial advice to me and to you as a millennial? Mm-hmm. And to those generations, and how you think about doing that, and how you bring those costs down while still giving high quality advice, because that's the essence where they think about the edge of the firm, right? Yep. Because one thing is you might be able to do it, but produce a product that kind of destroys your brand reputation as a high quality, low cost type of thing, right? Yeah. And so the whole case is about, there's a big thing in the case about how they are thinking about that, and how should Vanguard think about that. This is the next frontier for them. Should they go into that? Mm-hmm. There are issues in the case that show up where many financial advisors are using their funds. Will they still use their funds if they start competing with them? And there's this whole, open question. And mm-hmm. that's one of the things that we discuss when we do the case.
Well, and there are also these once you get to own almost everything, you sort of have this you're at a point where people start coming to you with ideas.
This is one implication of when you become so big, and the growth in indexing, and you have Vanguard now owning for every publicly traded corporation, they own a significant chunk of the equity. And if you add that to that BlackRock and State Street, you find now in many publicly traded corporations that the three largest shareholders are these three houses. And these money managers have, because they are promoting index investing, passive investing, they have been staying away from thinking about, that what being active in the boardroom and things like that, right?
Yeah.
But once you become so large, you cannot ignore that fact anymore. You own a significant fraction of the corporation, right? Of the equity of the corporation. And the three together, even more so. And so, that one of the things that come in the case is how they should be thinking now about proxy votes, how they should be thinking about governance of the of companies, etc. Because they are now so big that they have no choice but to be involved in those things. And so, to what extent should they be this passive investor be active? in a way, yeah, and there's this discussion that comes in the case about how active should they be, yeah. And they have this thing that they have put together where they are just basically trying to make sure that there are proper governance rules, there's proper corporate governance at the board level, but without ever getting into or if you wish, overseeing what the CEO needs to do or the management needs to do. They just want boards are properly functioning and do their work. But you see the whole spectrum. We have had BlackRock and Larry Fink going into maybe even be more proactive at the board room. And so this discussion is another interesting part of the case, which is how should Vanguard think about that?
Yeah.
When you cannot ignore anymore that you are big and you're getting bigger, right?
Yeah.
And I think that's a very important existential question, I think, for these very large index money managers.
Yeah, and they can get really crazy about it and start trying to boost beta returns, right? Or they can just take phone calls from shareholder activists and figure out how to deal with it.
Well, that's another thing we explore in another case that we do in investment management workshop in recent years, in the last couple of years, which is this case about Trian Partners and DuPont. So Trian is this big fund run by Nelson Peltz and Ed Garden and other partners in the firm, where they are making an activist investment in DuPont. That was well known, was in the press. They have done other activist investments in typically large conglomerates, and they are suggesting, Trian Partners, and they like to think of themselves as private equity in the public markets. They like to think of themselves as having a long horizon perspective on these things.
Very engaged.
They just look very engaged. They think of themselves as very engaged shareholders. So once they take a position in a company, they tend to try to take a significant position. And when they do that, it's because they have done their homework and they think there are things that they think should change in the company to make it better for the long run. And one thing they're finding themselves is, of course, when you are a company like DuPont or General, GE, or companies like that, no matter how big you are as a hedge fund, you are never gonna be able to buy enough to kind of get things change, right? Yep. So you need to find allies, right? You need to win proxy votes. And it's an interesting data point now, and in most of these large public corporations in the US, it used to be that you could win a proxy vote by engaging some institutional shareholders, which are not activists, but they are active managers, like T. Rowe Price or Fidelity or some of these big shops. But in today's world, to win a proxy vote, you really need to engage either Vanguard or BlackRock, or State Street. Usually two of them, at least two of them you need to win a proxy vote. And so we have this interesting thing where you have the indexers that have this, by this sheer size, a big chunk of the ownership of the shares, engaging with activists who needs them in for their proxy votes. And one of the things that emerged in the DuPont case is how Trian Partners need to persuade at least two of these shops to actually support them in a proxy vote where they want to transform DuPont from a conglomerate to spin it and to divide it into 3 companies and a bunch of other things that they want to do. But in order to do that, they actually need to engage with these indexers.
Well, there's maximizing shareholder value, right? And then there's maximizing learning value. And one of the things that one thinks about when thinking about Harvard Business School, the case delivery method, you guys are very particular about how these classrooms are set up. You're very particular about how these discussions go. How does this sort of context in which you have these discussions help you get the subtleties of these cases out to the attendees of these workshops?
I think one important element is we are very fortunate that we tend to attract highly motivated people. The quality of the participants in the program is off the charts, and the investment management workshop is one example of that. And so people come, they're highly motivated, they come with certain experience. We provide them with case studies that they come and read in advance and think about them. So when a highly prepared and highly motivated and high quality group of anything between 60 and 90 people come into one of these classrooms, we just need to listen to them. So our question is, we formulate questions, we try to lead a discussion, and I have to say, in every discussion I learn a lot from the participants. I learn new things in each one of them. And they go from the very important things to very nuanced perspective on things. We have a classroom set in a way that they made possible the discussion, the dialogue. People can see each other, they can interact, and we're just there to guide that interactive discussion. And usually it's a very rich discussion and a very interesting one, and everyone is actually quite engaged.
Well, you know,
and that leads to learning.
Well, and to coming back, you know, our friend George Austin decided to come back after they called him straight out in the in his investment minute, and he took it back to his firm.
Yeah.
That's really an amazing thing.
And you know, it's people challenge each other in a very, of course, polite and educated. But it's all about asking and formulating questions and having discussions. You know, what Vanguard should do or not do. I mean, we don't know what the right answer to that is.
Mm-hmm.
But we certainly have different perspectives on that, and we need to discuss them, and they need to be fact-based as well. One of the things that is very important in the case method is the cases that provide you with information so you can build perspectives.
Mm-hmm.
And the idea is, you know, there's going to be a decision, and there are going to be probably contrasting perspective on what we should do. And it's not about my opinion versus your opinion. It's more about here's what I think we should do, and here's why I think we should do. The why is very, very important, and that leads to very, you know, rich discussions. And you know, at the end of the day, we never have perfect information. And the cases reflect that. We don't know. You know, we operate with the information that we have, but we need to use that information to form a view.
Yeah.
On things. So it's not like I want to go that way because
it's true or
because I thought of that. Just is, you know, here is how I support the argument, and here is another evidence that maybe doesn't support the argument, and that's what you have a fruitful discussion. That at the end of the day is we are putting ourselves in the place, in the shoes of someone in the management of that asset management firm is trying to make that decision. And we're trying to actually create that feeling that I'm there to, I need to make a decision, and there's these contrasting views and perspectives. And what would I do, right?
Mm-hmm.
What should I do?
Well, and that process of formulating was how you actually make the change in the organization. You got to sell it. There's a question I got to ask you that's not related to that flow, which is investment management a profession? I don't know. Do you want to?
Well, investment management is an industry with a lot of components to that.
Is one of them a profession?
But there's many professions in there, right?
Mm-hmm. Okay, so the sort of
it's a profession, yeah.
So like sort of similar to like lawyer, doctor kind of thing.
Yes. Absolutely.
Yeah, the sort of we care about that around here.
But you know, there are many different things. One of the things that people think about is, and I tell that to my students in the MBA program because they're thinking what to do. You know, we tend to think about money management as the stock picker, right? And that's a huge component of the industry, and it's in itself a profession. You start as an analyst, and you become a portfolio manager, and then you know managing money either in a mutual fund or in a hedge fund, etc.
Mm-hmm.
But there is another big component of that, which is how you serve investors' needs.
Yeah.
You know, how you figure out, you know, there's a lot of very successful businesses that try to think about what are the needs out there the investors have, and how do we create new products that satisfy those needs.
Mm.
ETFs is an example.
Yeah.
You know, the concept of ETFs was created in Boston by State Street, but then really the institution that really made that business work and grow was iShares in San Francisco with Barclays Global Investors, that firm that was, you know, eventually sold to BlackRock.
Yep.
And you know, this was more about understanding how do we make a better mousetrap to kind of gain exposure to asset classes. Has nothing to do with picking stocks, and yet it's one of the most successful businesses in the history of asset management. And it has nothing to do with talent picking stocks. It's about understanding there is this need, and how do I create a product that satisfies that, right?
Yeah, well, in the first couple.
So there's this financial innovation side of the business, which is very different from the stock picking. You don't need to, you know, most of the people who came up with the ETF, they don't know how to pick GM from DuPont, from this, from that. But they have this sense that, you know, there has to be a better mousetrap to gain exposure to asset classes.
Yeah.
And came up with this very interesting structure that happened to be an enormously successful innovation, right?
Yeah.
Think about futures, think about options, think about,
Yeah, sure. It's just.
think about the robo-advisors.
Mm-hmm.
Think about all this kind of innovation that has nothing to do with actively managing money, but more about managing, covering, filling other needs that you and I as investors have, or endowments have, or pension funds have.
Mm-hmm. Yeah, that's an awesome answer. Thank you so much for joining us and for your stewardship of this awesome program.
Well, thank you for inviting me.
Oh,
It's
gosh.
a pleasure.
Yeah, well, I'm looking forward to seeing you up there.